Good afternoon, everybody. Thanks for joining us today. Before I introduce our guests, I just wanted to give a shout out to Taylor Burns, who's there in the back. Hi, Taylor. Taylor's here from Bridges by Epic in Westwood, which is a memory care assisted living facility. Thank you so much. And we're very happy to welcome, we have Kerry Weber and we have John Alexopoulos. Kerry is here, she's a realtor, and she's here to talk about right sizing, which means choosing the home that fits your lifestyle now. And then John Alexopoulos is a mortgage banker, and he specializes in residential and commercial lending and reverse mortgages, and they're going to speak to you today about making the right move. Thank you.
Thank you. Can I put this up? Okay. Okay. Hi, everyone. My name is Kerry Weber, and my nickname is the Redheaded Realtor. I am an East Walpole native, and I'm a real estate broker with RedDoor Properties. And this is my partner in crime, or AKA my work husband, John Alexopoulos from Radius Mortgage. We want to thank you all for having us, and the Council on Aging for having us. We're super excited to be here. I also, on a personal note, wanted to just send a little thank you to Bob and Barbara Humphreys. I know they're not here today, but I refer to this adorable duo as B&B in our last transaction. They gave me a lot of valuable input for our topics today. So again, thank you, and we're super excited to be here. A couple topics that we want to discuss, and I didn't want to do anything too mainstream or normal, so I kind of wanted to go out of the box. We're going to do reverse mortgages. John's going to discuss that. And also accessory dwelling units. I'm not sure if anybody has heard that term, accessory dwelling units, or what I refer to as a granny flat. I like to refer to it as that. We're going to also briefly talk about 55 and plus communities, whether you're considering purchasing or renting, the psychology of leaving your family home, and personal care attendant program. So my information, just as a disclaimer, is from mass.gov. Nothing that I just, blankly pulled up out of my head. So all your, information is from mass.gov, but you still have to do all your due diligence. So let me dig right in. As of February 2025, the new Affordable Homes Act allows homeowners to build accessory dwelling units in the state of Massachusetts. So what is an accessory dwelling unit? It's a small independent living space on the same lot as a primary home. Okay. Okay. How's that? Oh, thank you. Okay. So, were you guys able to hear me, or should I start over? Okay. So, an accessory dwelling unit can be categorized as a converted garage, attic, basement space, or a detached cottage with its own entrance. And why does this matter? Because seniors can age in place while staying close to family. You can create, if you need, a personal care program to help pay for an ADA, and that's something that we'll talk about in a few minutes. Also, an ADA can increase your property value, and they say that there's more affordable ADA units coming in Massachusetts within the next few years. Key facts are they need to be under 900 square feet. You still do need standard construction permits from the town, but it's not something that they can come in and say, you cannot do this. You can do this. It's an option. So the details, you can put a kitchenette in them. You can put a living room, bedroom, bathroom, laundry area. They will require a plumber to come out and, put in a water main line, or some kind of connection to the street. Has anybody had any thoughts of doing this? Okay, good.
Different towns have different requirements statewide.
It's statewide, but yes, different towns, you still would want to contact your building department. Yes. Yes, they can be rented out. So it's a great income producing option. Let me see. So it cannot be sold separately. I'm not sure if everybody realizes that. It stays under one deed. It's a perfect situation if you have family that has a home with a lot of property and you need somewhere to live and everything is okay with them. They say, yes, this is great. Come and do this. I actually had the experience where I had a home with my parents in an in-law apartment, and I was a single mom, so my parents helped shape my son's, life. It was great. And I know that's not for everybody, but if it is, this is a nice way to go. This is just a picture that I pulled up of a granny flat, one of my favorites. Very cute.
Can I just say this is the last question?
Yes.
I like lots of questions. Is it possible to have one that's attached, or they have to be?
Yes. Nope. You can do attached as well. So that would be your in-law apartment. Yep. That one legally, you're not supposed to rent out.
You know what I was thinking, by the way? People would love my house, so maybe I could get the extra one and rent out the big house.
Yes.
Something I could do.
Yes.
But I walk good and everything. I'm not ready for that. But
Yeah.
some people would love my house, and I could have the smaller part.
So you'd put a granny flat on your property and then rent out your main house?
Yeah.
Yes, absolutely. Right?
If you drive around now, I've noticed it. If you drive around, you will see more and more foundations. Okay, there'll be no basement. It'll just be a slab. You'll see it more and more. I've seen 3 in the last month of people that just have some space and they're going to build one of these 900 unit, 900 square foot houses. It's very popular right now. I mean, you're going to see it more and more and more. And as Kerry said, the regulations are a lot less. It's pretty simple. It has to be 900 square feet, and you can build what you want, and it's gonna be very, very popular because there's a shortage of housing.
Mm-hmm.
And another thing that we see in the mortgage industry is generational buying. So I did 2 loans this month, and it wasn't with 2 people; it was with 3 people. A couple and their dad. A couple and their dad. One's gonna live there. One's just gonna be a co-signer. It's because with prices the way they are, with rates the way they are, people can't afford it anymore. So you
Yep.
have a lot of generational buying and a lot of these ADUs.
Yep. Does anybody have any questions or whatnot? No. Okay.
900 square feet, the limit.
That's the limit.
Yeah.
It's still pretty big.
Mm-hmm.
900 square feet, as you can see from the pictures, it's still pretty big. It's going to be able to, have a couple in there.
Mm-hmm.
When people go from the extra house to the main house, or is there like a lock and everything you can't go through?
No,
I mean, like, say somebody's in the extra house, can they walk into the big house too?
well, that's how you set it up.
Yeah. I mean, no, it's fine. If you have family and you want to give each other keys, yeah. Or, if you're going to rent it out,
No, but I mean from the inside without going outside.
can it be attached or detached?
So you
Yes.
walk inside
Yes.
one part to the other.
Yeah. So that would be more so your in-law suite versus the granny flat. Yeah. Briefly, I just wanted to touch on the Mass Health program in its PCA, they call it. So it's for people with permanent or chronic disabilities to remain independent at home by hiring a personal care attendant to assist with essential tasks in daily activities. The PCA is being paid by Medicaid or Mass Health funds. So it's a consumer-directed program that means that individuals with a disability become the employer, and a family member can be hired as the PCA, provided that they're not a spouse, a legal guardian, or a surrogate. And adult children's or children with parents of adult children with disabilities are also eligible. So that's a good option if you're thinking about this, but you're thinking, how am I going to pay for this? Or where can you get a little bit of extra money, whatnot. A few other options. I know it's probably not ideal, but I do see a lot of RVs in the sides of people's houses, and you could live in an RV. So I did put a couple QR codes here, and if you'd like to take pictures, feel free. There's a tiny home company in Walpole, so the QR code is there, and there's a QR code for RVs. So on to our assisted living residences. Does everybody here own a home, or would you say we have a raise of hand who owns a home? Okay. So that's really good. Has anybody ever considered a reverse mortgage to kind of... All right, John, I'm going to give the mic to you for a few minutes. Okay. All right. So also, I have a QR code for assisted living residents if anybody needs. There is all the assisted living residents in Massachusetts here, and there is a list of 55 plus living residences here as well. So B&B Humphreys mentioned to me that a lot of people have, it's hard, to think about the psychology of downsizing. And I always tell people that stuff is just stuff, and possessions can feel important in the moment, but when it comes down to it, when you want to move, it's hard to figure out what to get rid of and what to take with you. But what really stays with us is our memories and not objects. And it doesn't mean that things don't hold sentimental value, like a rocking chair or a box of letters. So my approach is, if you're thinking about moving and you want to downsize, to really take your jewelry and your photos and pretty much, try to give your possessions to your children so that they can pass them on. But
I'm thinking of downsizing at some point. And the rest,
just one, two?
and the rest of you just want to stay in the house you're in?
Maybe buy a condo.
Okay.
Yep, okay.
Yes.
Okay, yeah. Okay. In case anybody's curious how the real estate market is right now, we have 13% more listings than in 2024. We have a 10% increase with days on market compared to Q2 of last year. And sales are up 4.5%. Sellers are still receiving over asking. And the bottom line is we are in a historic housing shortage, and less supply equals more demand. So, John, I'm going to have you jump in.
You want to run my screens for me?
Yep.
Can you guys hear me without the mic?
Here, no, take the mic.
All right, I'll take the mic. Will you do the screens for me? Okay. How's that? Everybody can hear everything? Okay. So like Kerry said, my name's John Alexopoulos. I'm with Radius Financial Group. I've been doing this a long time. I do residential, I do commercial, reverse mortgages. And I love the topic about reverse mortgages, and I want to ask some questions and get some feedback. How many people know what a reverse mortgage is? Okay, you've heard of them before. How many people have heard bad things about a reverse mortgage? Okay. So I want to explain to you, reverse mortgages, as we call them now, they're called HECMs, Home Equity Conversion Mortgages, okay? They're not really called reverse mortgages anymore. Now, prior to 2008, they were not a great product, okay? After 2008 to now, they've been a fantastic product. The government took them over. And what I like to say about them is a HECM is like medicine. So if you're taking medicine that you don't need it's not going to be good. But if you're going to take medicine for something that you need, it's going to help you live a longer, healthier life. And that's the same type of thing as a reverse mortgage. Now, to qualify for a reverse mortgage, you have to be 62 years of age and own your own home. All right? Now, it has to be a primary residence. The people that get reverse mortgages are the following people. Number one is a lot of realtors, when they turn 62 years old, they get a reverse mortgage because it's cash for them to buy houses, flip houses, make a lot of money. Okay? So that's the first person. The other person that gets a reverse mortgage is somebody that wants to use the equity that's in their home. They want to stay in their home. They want to be able to pay all their bills, and they want to have maybe travel. They want to be able to do all these things that they may not be able to do normally. Okay? So as I'm doing this, please ask questions. Let me explain the process. When I talk to somebody about a reverse mortgage, first it's over the phone, all right? And I ask them simple questions. How much do you think your house is worth? How much do you owe? Okay. Are you currently working? How's your credit? Things like that, all right? The big thing on a reverse mortgage is equity. It's not really credit, so if you're behind in your credit, that's okay. If you are not working, that's okay. A lot of people have Social Security, pensions, things like that, all right? And from this conversation, I come up with a proposal package, okay? There's a lot of, what I want to tell you is there's a lot of checks and balances in this before you get the reverse mortgage. So first we have an interview over the phone, and I really have to ask the correct questions, and I get a feel for your situation, all right? Then I put a proposal package together. And now, and what I do is I drive out to people's homes, and I sit down with them, and I go over the proposal package. So I just did one down the Cape, where I drove down the Cape, and I met with a woman, and there was another woman there, who I think was her sister or somebody like that had a little knowledge. So we went over the proposal package. And the key to these reverse mortgages, and one thing I want to tell you, not everybody qualifies. They're difficult to get. So I don't want you to think that, people are just giving away money so they can own your home. That's not the way it works. So there's a lot of, they're not easy, and it's based on equity. I've had to say no to some people. If you don't have enough equity, you can't get this. But in this particular scenario, and I like to use scenarios, the house is worth about $600. They owe about $200. And after we did our due diligence, they're going to have access to about $150,000. Okay? Now, one myth, I want to talk about some myths. You don't own your home anymore. That's a myth. It's the same thing as a regular mortgage. You just don't have a mortgage payment. It's paid at the end. All you do is pay your taxes and your insurance every month. You don't have to pay on the money you borrowed. And you can borrow the money three ways. You can have a line of credit, a monthly stipend, or a lump sum, or a group of the three. All right? And we set that all up. So I drove down to the Cape, and I met with these people, like I said, and I have this little, it looks about like this, okay? That is one of these, okay? And we sit down, and we go over everything. And I show them the grid, and I show them the graph, and I show them what their house is worth, and how this works, and how much money they can get. In this particular instance, she had access to about $40,000 year one, okay? And then after that, she could draw higher, up to, I think, $140,000 or $150,000. But we sit down and we have this discussion, and they ask a lot of questions. Is it a regular mortgage? Yes, it is, but it's not a forward mortgage. It's a reverse. It'll be paid at the end. So what does that mean? Say this woman, she's 80, her and her husband, it's Kerry and Leo. So say they live there 5 years, and they either want to sell, or they pass away, or whatever. At that point, the house, the mortgage has to be paid off. So the house will be sold. or whatever the heirs want to do, and you'll know by the grid what is owed, and the rest of the money goes to the kids. So that's how it works. So this house is worth 6, they owe 2, say they took 100, they're going to pay 300 plus interest, and whatever is left after the sale, it's going to go to the kids. So it's always in their name. People, there's this myth that it's not yours anymore. It's the same. It's just you're not making a mortgage payment. Okay? Yes.
What happens, like in Sharon, there was a man named Leo, and he lived to 105. So if somebody lives to 105,
God bless him.
and you're running out of money, are you going to kick the person out?
No, that can never happen.
Well, it could happen. Like if the person lives too long, it's not going to work out too well for you.
No, here's how it works. You never have to pay more than the house is worth. So it's never a negative to you. In that case, the heirs aren't going to get any money.
They won't get any money, but they won't have to pay any money.
Correct.
Because, like I say, I wouldn't want somebody's house to be ripped away.
No, that's not the way it works. It's just like a regular house now. You're going to have a value, you're going to sell it, you're going to have a net proceeds, and that's what you keep.
Good, because there would be a negative if somebody...
Well, in his, God bless him that he lived to be 105.
He did.
And there's no money left for the heirs. But in most of the reverse mortgages, the kids say, Mom and Dad, this is your house, your money. We want you to do what you want to do with the money, okay? So back to my little scenario. So I went over everything. Now, in this case, I want to tell you what happened here. In most of the cases, people need the money. Now, it's a nice home. She works. He doesn't work. But they got a call. They got a letter from their insurance company that their insurance was going to be canceled. And this is going to happen to a lot of you now. Me, Carrie, you people. The insurance companies now have drones. And they fly above your house and they look at your roof. Okay? They're looking at your roof. And they're trying to find out what shape it's in, the age, and this whole thing. Because I'm not a fan of insurance companies. Maybe you aren't either. Okay? I mean, they do good things. I had a fire in my house. The house burnt down. I had to rebuild it. So I guess I'm a fan there. But I'm kind of not a fan of the way they're raising everything and the increase in this and that. But so this particular couple, a drone, they get a letter in the mail. Your insurance is going to be canceled, okay? Unless you fix the roof. Well, they don't have the money to fix the roof, all right? And they don't have the money to do a cash-out refinance. They don't have the income. That's the great thing about reverse mortgages. You qualify on equity. You don't qualify on income. Now, everybody has equity. Everybody does. But a lot of people can't get it. Say you're not working. Your house is worth $1 million. You owe $200. You're barely paying the mortgage. You don't want to sell the house. You need money. What are you going to do? Reverse mortgage is a great answer. So with these folks, I met with them, and she was very, very, I got referred by a realtor, Barbara Corcoran, William Ravis, and they were nervous, cautious, as I want everybody to be when I sit with them. And we went over everything, and I answered all the questions, and they were very, very comfortable. Okay, so we talked about everything, but it doesn't end there. You know, I told them how much money she can have, but you have to get me some documents and things like that. And then what they do, they take that package and they go to counseling. Okay, you have to go to counseling. She went to one in Hyannis, and you're going to sit down for about 2 hours with a counselor, and they're going to go through the whole package again. They're going to answer all your questions. They're going to make sure you're comfortable with the whole process and what's going on and answering questions. Because like I said, there's a lot of myths out there, and they're inaccurate. They might have been true before 2008, but they're not true anymore. So she went to the counseling, her and her husband. And one thing about this is it takes a little bit of, as I look out here and I can look into your eyes, and I can kind of read into you. I can just read into you, and I get it, Same with my parents and aunts and uncles. I see what you're thinking, okay? That's why we take a lot of time with this, and we take a lot of explanation, and a lot of graphs, and a lot of grids, and things like this. So she went to counseling. I called her. I said, when is it? She told me. She called me. She said, I went, and I really like it, and we're going to move forward. Okay. So then what happened to Kerry? She gets a relative who wants to call and blow up the whole thing. Tell her that reverse mortgages are no good. I said, I think this was maybe before counseling. I think maybe it was before. I don't know. So long story short, I had a conversation with Kerry, and we talked about everything. And what people have to understand, and remember I go back to the point, they're like medicine. So say you have a bad heart, and they have you taking medicine. And your friend says, you don't need that medicine. Just go walk around the block a couple of times. You'll feel much better. Well, that's not the answer, right? You need the medicine, okay? And the same thing with a reverse mortgage. People need it. Now, if you had millions and millions of dollars in the bank, maybe you wouldn't do it. Or maybe you think to yourself, yes.
How is it different than a HELOC?
Okay, why don't we go to that question, that slide? That's a great question. Okay, yeah, go to the next one. Okay, here we go. So this is called a home equity conversion mortgage, and you brought up the question about a HELOC. Okay, it says the first one: do you keep title and own your home? Both are a yes. All right, so you both own your home. The next one: money available for immediate use? Yes and yes. Are you responsible for taxes, insurance, and home maintenance? Yes and yes. But the biggest difference is you have to qualify. So you have to qualify for your mortgage, and you have to qualify for the HELOC. And most people on Social Security or pensions or part-time jobs do not. So that's the problem. They don't qualify. Now, I do home equity loans all the time, but people don't qualify. Because remember, this is based off equity. The more equity you have and the older you are, the more of a house you can get. I mean, more of a line you can get. Yes?
How do they determine the interest rate that you pay back?
Okay. It's done. There's we go by a current rate, and then there's a margin in there. It's a fixed rate. I think these people that I just did, it was high 7s, something like that. So it's based on a Wall Street index. It's based on current rates, just like it is for a regular 30-year fixed forward mortgage. So there's a rate, an index, and a margin, and we explain all that. Okay. Yes.
So I don't mean to be debating you.
Yes.
But I know the pros and cons, and one of the things that you're not mentioning is that your method is a permanent method you can never get out of. A HELOC you can pay off and you're free. Once you
Right.
go ahead with your type of mortgage, it's permanent forever, no getting out of it ever.
Oh, no. No,
You
you
can get out of it, it'd be very complicated.
sell the home or somebody refinances it out. Somebody.
Very complicated and costly, but that's.
No. What's your first name?
Philip,
Philip. I love the.
I do know economics.
Good, and I like the questions. I love questions, but you're incorrect. Okay, so there's two ways that you would get out of it. Say number one, you both passed away. Your heirs are going to sell the house, and they're going to keep the difference. Say you didn't want it anymore. You can either sell the house, or you can have someone hop on the mortgage with you and refinance out of it. So there's ways to get out of it. But remember, it's like a marriage. You're not getting married to get out of it, right? Well, you're not getting a reverse mortgage to get out of it.
It would be complicated and expensive.
No, it wouldn't. It wouldn't, but it wouldn't. Yes, sir.
This whole thing, you talked about, if you own your own home.
Right.
Are there any, does that mean that you own your own home without any
No.
restrictions?
No, it just means you're on the deed of a primary residence. That's all it means.
You could have a mortgage on the home,
Oh, yes, and most people do. You just can't do it if you have an apartment. You have to have a home.
but you have to own the home, not.
Right, but not free and clear. Right. Like the example I'm using, their mortgage is for $260,000. It's worth about 6 something. Okay. Is there another comparison one? Okay. Here's to your point about the HELOC. Here's some differences. Required monthly payments on the reverse, No, you just pay taxes and insurance. On a HELOC, you have to pay, okay? How's the money received? As I mentioned, credit line, lump sum, or a stipend each month, credit line only. And another thing about a HELOC, and I don't know if it's on there. Let's see the next one. Loan balance. No, you can. It's that same one. There you go. The loan balance increases. The more you have this, the more you can have. Okay. And the loan balance decreases. They can, as long as you keep the house up. That's one thing you have to do. Pay the taxes, pay the insurance, keep up the house. You're fine. Can heirs be required to repay more than the home is worth? On a reverse, no. On a home equity, yes. Okay? And back to my scenario here, because these people are very typical. 78 years old, got the letter in the mail, need the new roof, want to do some traveling, want to get some money, but don't qualify. All right. So they went to counseling, and it was fine. The woman butted in, and then after we had a long talk, she decided she was going to move forward. I drove down to the Cape with this package, went over it again, showed her how much money she'll pay off this year, as we went on. And then what we do an appraisal. So the appraisal came back about $50,000 higher, which is great. She's going to be able to borrow more money if she wants. You only pay back on what you borrow. If you don't use this for 2, 3, 4, 5 years, you don't owe anything. Okay, you just owe. You don't owe because you didn't borrow. All right, or maybe you take $5,000 out to take a trip or something. That's all you're gonna pay interest on. So on this one, I've had to work a few things, and I wanted to use this one because it's interesting. They said the roof is no good, right? I looked at the roof, and I thought the roof was okay. And it goes by the age. 25 years and over, they want you to get a new roof. 25 years and under, you're okay. So that's why they asked we also own a insurance company. So it's Radius Financial Group, and one of the parts is Radius Insurance. So I've learned a lot about insurance, and the key is the roof, and it's the age, how much life is left, things like this. So anyway, the appraisal came back good, which I was very happy about. But her insurance did get canceled on September 1st because she couldn't replace it. I mean, these folks were I really like this because I'm really helping them, and it's going to be a great story. It really is. So the appraisal came in higher. Okay. And she can borrow more money. Now I'm working on getting her insurance because the other insurance has been canceled. The appraisal was done. He makes no mention of the roof. No mention. So we don't have to fix the roof. He did make mention. Now it's an FHA loan. Okay, Federal Housing Administration, Division of HUD. We took it over in 2008. He did mention that there's some stairs that need to be fixed in the back deck, that a door to a shed had to be painted, and there's some trim that has to be done. So I immediately called. Now, she doesn't really have the money to do this, right? It's not a lot of money, but I called the realtor, and I said, hey, do you have a contractor down there? I'll send you these pictures that can do the work. And after the closing, he'll get paid. She said, sure. Yes, I do. So he went out, met Kerry, and she showed him what had to be done. He's going to do the work before closing, and he'll get paid after the closing because she'll have $40,000 that she's going to take, and she'll just, whether she takes a line of credit or a monthly stipend or whatever she takes, that's how she's gonna pay. And it's only going to be $800, $1,200, something like that. But my point is, we're working here together to get them to be in a good situation. They're going to get a new roof. After the closing, she's going to have money if she wants. She's going to have to have the roof. The insurance company is going to go out after closing and inspect the home. They do that all the time. Even if you buy $1 million house, you buy a regular house, regular forward financing, they come out and they check things. So he's going to come out and he's going to see the trim has been painted. He's going to see that shed has been fixed and all that. And then if he makes mention of the roof, she now has the money and the confidence to fix the roof. Right now, I mean, she's almost near tears. But before she met me, she was almost near tears. We can't insure the home. And they do put insurance, they call it a forced insurance in place. The mortgage company will put this in there, but it's the Mass Fair plan, it's very expensive, and you really don't want that. So technically right now, since the 1st, I think they did that. So today's the 11th, so she's had 11 days of this. But I'm going to close her at the end of the month. We're putting a new insurance in there. They'll get their money. They're going to choose how they want it. And they're going to have a reverse mortgage, which I'm very happy about because it solved a lot of things. But not everybody gets them. I had a guy call me, and he just got diagnosed with MS. And somebody referred him to me, and I did my due diligence, and he can't borrow a penny. And he has to sell the house now. So I don't want you to think that we're just giving them away, because we're not. There's a lot of due diligence and things like that have to go through these. Before I continue, any other questions about this? No? Yes. What's that? Yes. No. The story, and it's a great question. And there's a lot of, because see, my goal here is when I leave, I want you to understand, in the right scenario, reverse mortgages are an excellent tool. That's my goal. Because they really are, in the right scenario. If you have a great heart, you don't need heart medicine. But if you have a heart that's bad, you need heart medicine. Well, if you're in a situation where you want money, you can't access the money. I had another one, before I answer your question, I had another woman that wanted to travel. So her realtor father, who you know, Dennis, and they didn't want the house. Mom, you do whatever you want. And she'd been a caretaker for a lot of years, and she said, I want to travel. And she wasn't really working, couldn't get access to the money, but through a reverse mortgage she can. And she's going to get this money, and when it's time to sell the house, pay off the mortgage, and the rest will go to them. There's nothing left, so what? They don't want it. But to answer your question, no interest is paid up front. The only thing that's paid up front, the closing costs are a little higher than they are on a regular mortgage, all right? But the interest is paid is each year that goes out. So say you have one, year one, if you paid it off, there'd be this much interest. Year two, this much interest. Year three, it gets higher as you go. So if you pay this off in 20 years, and I have a grid that I show the people when I meet with them, you'll pay more than you borrowed. So the interest is on the, so on a regular mortgage, we pay down the mortgage. On a reverse, we don't, it goes up. But there's no interest paid up front, and it's paid when you sell the home or refinance. Maybe, let me think of this one. Well, first of all, one thing, you don't pay them out of your pocket. You don't need, you got a question there, Leo?
I was going to say, and vary the interest, like the interest rates are going down. You
Right.
reduce the interest rate.
You do.
Rates go down.
You do.
But anyway, that's what I thought she asked a very
No, she did.
repeat it, please.
No, but I want to get, you asked me about, right. But you have so my point is, you don't need any money to do this, first of all. The closing costs are put into the loan. You need $200 to go to the counseling. That's what that costs. You don't need any money. You have to pay for the appraisal up front. Okay, that can be put in a credit card. But the rest of the closing costs or anything are rolled into the loan, and they may be 25% higher, something like that. You know, there might be a point or two in there. But it's necessary for you to get the loan, okay? And again, it's government monitored. It's not crazy. We explain everything. But again, in the right scenarios, it makes a lot of sense.
But you did not answer the question what the interest rate is.
Well, no, the interest rate changes daily. So if I give you a reverse mortgage today, here's what the rate is.
Is it today?
Oh, I don't know. I don't know. I don't know. What else did I want to talk about? Yes, you had a question. Well, it can be done by Zoom or it can be done in person, and they just go over it. They're an independent person outside of myself. And they sit down and they go over the reverse mortgage system, how it works. What are they? They're called financial counselors. Yeah, they're not. They have nothing to do with me. There's like in the flyer I saw, there was like 30 of them in Massachusetts. You pick the one you want. This one was in Hyannis. You go meet with them through Zoom. I don't know. They're probably different things. I don't think they're lawyers, but they're just counselors who. So prior to 2008, I don't think they had counseling, and people were just signing. 2008 after, you get the proposal. Then you take the proposal. Maybe you don't want to ask me all the questions. Maybe you feel overwhelmed by me. Maybe you don't trust me, but you need this. When you go to the counselor who's independent, doesn't work for a bank, doesn't work for anybody like that. They're just like going to a therapist, but it's financial. And they're going to go through page by page for 2 hours, go over everything, answer all your questions. That's right. I give the proposal. You have to take the proposal to them, and then they sign the proposal, you sign the proposal, and then if you're moving forward. I have to make sure that you went there, and they have to sign that they went through it. There's a lot of logistics, but I'm happy if you get to counseling, because a lot of people don't. If you don't have the equity and you have too much debt, you're not going to get it. They're not easy to qualify. So there's two things out there. There's myths, and the myths are all false. And there's another thing that they're easy to get, and they're not. That's why we have a phone interview. Then that's why I look at the proposal. I mean, if you could only get like $8,000, you're not going to do it. It doesn't make any sense. In this particular case, they get $140,000, $150,000. Oh, you're welcome. It's a great question. Any other questions? Yes.
You mentioned the term forced insurance.
Yes. What's that? Yeah. So if homeowners insurance is a fancy word for fire insurance. Your house burns down, you need the money to rebuild it. Okay. So any home that gets a mortgage has to have insurance. If you forget to pay, all right, times are tough or whatever, and it lapses, and you've been canceled, and there's no insurance on the house, the mortgage company, who's a partner, right? They own this house with you. They put an insurance policy on the house, and then you have to pay it yourself, and it goes. So your payment's going to go up because there's this forced insurance, and it's usually more expensive. But unless you've got lapsed and canceled, they're not going to put that in there. All right, you'll get a termination notice, but you can always make up and pay the thing. But so reverse mortgages, or we call them now HECMs, home equity conversion mortgages, they're very popular. There's a long, like I said, we have the initial interview over the phone, we have the proposal, we have the meeting, you have the counseling, we have the signing the application, and then we have the closing. There's like 6 things here. Then you can ask questions and move forward, and then you'd close on a Monday, and you get your money on Friday, because it's basically a refinance. You have 3 days of rescission to cancel if you wanted to. Monday, you get your money on Friday. You pick the 3 ways you want to do it. But back to the myths. You're never going to lose your house. You always own your house. You have to pay the taxes and insurance on time. There is no mortgage payment. It's paid at the end. You have to keep the house up. It can't become all of a sudden a junky house. That would be a problem. You know, you have to keep up keep it up nice. What else? They're not easy to get. But in the right, when it works, it works. You know, in this particular woman, it's gonna be great for her. The other person, it's gonna be great. The guy with Parkinson's, he really needed it, right? He really needs it. He's not getting it. Now, I got another call the other day. A woman is in hospice. She has like 6 months to a year to live. She has a healthcare proxy. She has a POA. She wants her last year to be spent in her home. And so this is where reverse is going to really help, right? I mean, she can't get the money out of her house any other way. So it's in every different situation. But also, it's not because you're destitute. It's because you got $1 million house, you're not working, you only owe 200. You'd like to have access to that money that you paid for. Let's go do things. Let's travel. Let's pay down. You can take this money and give it to somebody for a gift. Maybe your grandkids want to buy a house. Use this money to do that. You can do anything you want with this money. You can buy a second home in Florida. You can do anything you want with this money. It's your money, okay? Give a gift for your grandchildren. Pay for your grandkids' college. Take trips. You know, whatever.
Put a granny flat in their yard.
Put a granny flat in your yard. You know, and back to that, when you're driving around, start looking at those. You're going to see, I've seen 3. I look in the backyard, and there's a what do we call it? A slab, and they're going to build a 900 square foot really nice house on there. And either the parents are going to move out of the house in there and the kids in there, or maybe the parents maybe their son can't find a house, it's so expensive, he's going to live in there. You had a question?
From what I could see, my research, about 150,000. That's if you're gonna go, you know, the really nice one. So probably, you know, I 80 to 150.
Now, that's a good question. It's a little foray into something that I could cover. How do we pay for this, right? A granny flat? 2 ways. So Fannie Mae and Freddie Mac, who are the leaders of the mortgage world, that's a big proponent. It's a big push to do more and more of these. So 2 things you can do. If you have the cash, you use the cash. You can take the money out of your house with a reverse mortgage or a home equity loan, or you can do a refinance, renovation refinance. We add the house to the other house, which gives you higher value, and we give you money based on that, and a renovation loan is done. Contractor does work, and we pay him after 6 months or whatever. It takes 9 months, whatever it is. It's done. He's been paid, and you just continue to pay the monthly mortgage. So, any other questions, thoughts? How many people think that a reverse mortgage is not a bad thing right now? Did I get you people to think that it's something to look into? Good. I'm glad, because it's something to look into. It's something to go through the process. It's something to listen to. But there's so many checks and balances. You're gonna learn. You'll be an expert after you go through the 6 meetings.
I think
Okay.
you're better than Tom Selleck.
Well, thank you. Thank you very much. I've seen his commercials. Well, if thank you. Well, if that's everything, I'm going to give it to Kerry.
Does anybody have any questions for the redheaded realtor? My thought was a reverse mortgage could help if somebody wanted to do a granny flat. And then obviously you'd probably want to sell your primary, move into the granny flat. But if anybody would like a copy of either of these slides, just jot down your email address. If you live in your primary and you get a reverse mortgage and you want to put a granny flat on your children's lot. Right. Yeah. Sorry. If anybody would like either of our slides emailed to them, just write down your email address on the notepad. And thank you all for having us.
Take one of these little packages when you leave. They have our cards in there.
Yeah.
Notepad and pen, and we'll come up with
Yeah. If you have any questions about anything, reach out to us.